Good morning, everyone. Microphone check, screen check. Hopefully everyone is doing well. Give me 1 second here. There it is. Interesting. Sorry, I'm checking out an NFT drop on crypto. Just seeing how they do it. The Bewitching Halloween NFT drop. It's $100 per. Okay. All right. Anyway, welcome. Good morning. Hopefully everyone was able to rest up and have a great weekend. I know it's not Monday, kind of is for me, but apologies for yesterday, just kind of cutting out and not showing up. We had a few things to take care of, emergency style here, and we got that all taken care of, and everything's good to go, and yeah, so we're back and ready to rock and roll, and should be good to go. So let's jump in like normal here. Good morning, everyone. Laddie, Brad. Everybody else so far, good morning. As per the usual, make sure to read through the morning prep PDF on the right side of the screen there. Very important to go through and understand everything that is inside there. And then along with that, also, if you're watching on the YouTube side of things, understand that there is, 5 to 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. And then, of course, along with that, I just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Welcome to the fam. I'm super excited to have you all on board. If you aren't part of the SSFTG fam yet, there are a ton of different ways to join up. One of the easiest ways is just to join as a YouTube member with the join button below the stream there. Gets you in the chat room, the YouTube community boards, stock and crypto chart posts, and a little bit more just kind of behind the scenes and what's going on. Of course, if you want to understand how we do everything, then check out the Day Trading Academy along with everything else that we have waiting for you over at ssftg.com. So if you're here for the first time or the 1000th, good morning, welcome. I hope you're all ready to rock and roll alongside of me today, analyzing these crazy markets. Let's take a look at what's going on today, jump into some charts, jump into some news, and all that fun stuff. Don't forget to grab your morning DP levels. Those are posted for you every morning on the Major 7. Nasdaq, S&P Gold, Crude, Euro, Bitcoin, and Ethereum. Woo, still got it. They're all there ready to rock and roll for you. We also have the schedule for 2022, which is kind of crazy to think about that we're almost already in November. Slap myself in the hand here because it's not even Halloween yet, but either way, it's there. All right. Looking at the news calendar, we don't have a whole lot until 10 o'clock. CB Consumer Confidence is the news along with new home sales at 10 o'clock, and that is forecasted at 108.3 and 760,000 respectively. That's about all we've got going on, though. We do have, of course, Tuesday's API report that is coming out at 16:30, and they'll give us an idea of what to expect for crude oil inventories tomorrow. But that's really about it. All right. Let's jump into some charts, take a look at some stuff here. Let's get rocking and rolling. Starting off on the Nasdaq and keeping things going here. We've got a really good amount of continuation going with the bulls, right? I mean, this is just absolutely incredible bullishness that we've got going on for the Nasdaq. And really, the last time the market had I guess if you want to call it a pullback, it wasn't really much of a pullback, but if we start from the top, and go to the downside here and kind of see inside that pullback, we sort of created this middle weighted point. The market broke above, almost trapped the lows, and then shot back to the upside. And if we look at what happened over here, it's very similar, except this time around, they didn't quite get as far down. They didn't get that trap, but it's still 3 higher lows, right? It's just this pattern is kind of taken and spread out over here. We still have that 3 higher low pattern. They did it very aggressively with that bull bar back there. But it's off to the races. And here we go once again, all the way to the highs. And likely when we get up to the highs and it doesn't immediately pull back, we have a grindy market that stays on the highs for quite a while, creating somewhat of a spike in channel. And that happens very frequently. basically every time we have this type of scenario. So, I mean, we have to play, kind of cognizant of what's going on here. This doesn't have a bottom. That's kind of what stands out to me, is that it doesn't really have a bottom. All we have is the top so far. And the top, I mean, I guess it gives us something to work with. That's about all we have for right now, though, on the Nasdaq. Zooming in a little bit closer and kind of seeing how this breakout momentum wanted to play. They did have that new high, which then led into the 2 legs down to a new low. So on that first drop, right there, just the impulse, bottom weighted POC all the way down at the lows. Okay. The next drop down to the next new low. They actually kept it up there. And that ended up being the higher low break point. Oh, no, they did shift the POC one more time on the higher low and then came back for the retest inside of that. So with the continuation to the upside, it kind of starts a new story. Realistically, I'm sure there are a lot of traders who got stuck inside of here looking for the short continuation. But realistically, the volume would suggest that the bulls gobbled that up like it was going out of style. And, well, the sellers, if they were stuck from down there, really didn't accomplish a whole lot. If we bring this a little bit further forward up to the new high, maybe this will give us a better clue. Yeah. Okay, so we've got the POC for those shorts. And again, it's assumable that those are shorts, just given that the previous context, we've got drive down, sellers looking for continuation and failing. They obviously jump ship at break even. So these sellers have kind of gotten out unscathed. But if we continue this a little bit further up, see if anything changes from there. No new POC. Go up to a new high. No new POC. Up to another new high. No new POC. Up to the next high. Nothing. And the next high, which has nothing. So realistically, the only thing that we have to work with is that if these were shorts that were stuck, they were able to get out of break even. And if the longs were waiting for those shorts to get out of break even to initiate their longs, then we are in that scenario. Now, if we look at this from a risk perspective, right, we've got the POC, which would be at 340, and their assumable stops would be underneath the lows somewhat. If we're looking at the 3-to-1 objective, that's way above the highs. It doesn't really fit. So let's go backward a little bit and see. How does a 2-to-1 look? 2-to-1 is just inside the top, but it does fit. And one thing that I like to see, I know they just slammed through it, but when the market came back to it, we talk about this pretty frequently, and I think I made a video on YouTube about this not too long ago. But when the market breaks out above a major target area and then returns back to it, it allows traders to re-enter as if they didn't exit, right? A lot of traders re-up into those scenarios when it demonstrates excess strength, and that's what happened here. We had an incredibly strong blow-off through the 2-to-1, but it just missed. And that's the key, right? It just missed the 3-to-1. Like, by a fuzz and a half. Like, barely missed the 3-to-1. Front runners were fine, obviously. But it just missed the 3-to-1. Pulls back, fills the 2-to-1s to re-up for a quick little 1 ad. You know, a 1R ad, if you will. Not too bad. Either way, though, we do have more continuation to the upside. If we're breaking through the 3-to-1 objectives, then realistically, the next target is going to be a 5-to-1 for the bulls, and that doesn't see light until around 15,675. Sheesh. We'll see. I mean, this thing's way up in the stratosphere, and the reason why I spent so much time on the Nasdaq is because the S&P is literally the same. There's like no changes, nothing different from the S&P to the Nasdaq. It's still a massive spike in channel working its way higher. A little baby one setting up over here. I mean, it's identical. So, fuzzing, and that's about all it was too. Man, that thing was just right there. We've got this, good morning, Maurice, by the way, and Steven and everybody else so far, good morning. We've got the rotation to the upside in the S&P, which is very aggressively bullish. I mean, again, you know, it's the same analysis. If the shorts are stuck, they're still getting obliterated, although chances are they've had at least a shot to get out of break even. Over on gold, we've got a continuation to the upside, and when they last broke above the highs, I think it's safe to say that it wasn't a success the first time around, but they maintained the higher low. The higher low stuck around, and they continued back up. Unfortunately, they were unable to make another high. That's a problem. That doesn't help anybody. So as far as the continuation phase goes, we had a little bit of a pennant formation. The bulls could have tried to get something going there, but they couldn't. Came back to the point, rejected it, and now we're on our way back lower. Very typical of what we're seeing on gold. All of these high side moves have very frequently been failures. But after a sharp correction is usually when the market goes flying back up. So really the thing that we're kind of waiting for on gold, and what seems to be most consistent, is waiting for the dive or the rip, whatever it happens to be, and then waiting for that to create a base. And that's almost always where the launch takes place. Same thing over here. Sometimes they'll front run it with the opens and closes down at the lows, but you get the idea. It creates a buffer zone. We have the same thing over here, which creates a zone of interest. Lows and low closes would be down here. That's going to be the zone where traders want to start trying to jump in. And it hasn't pulled back there yet. All of the other times has bounced off there multiple times. We haven't had that yet this time. So as far as a swing perspective goes, gold gives us an area of interest down in the 85s. I'll see if they can make it there. Over on crude oil, we've got a continuation back up, hit above the 85s momentarily before dropping back down to where we are now, 83.92. Very pokey, whippy on gold. Or, geez, see? It looks like gold. On crude oil, I mean. It looks like gold. This thing's really, really whippy. One thing is obvious. The whips to the downside seem to be, at least for now, getting gobbled up like they're going out of style. All of them, even if they're along the way. Right? Whenever there's a big wick along the way, it seems like the buyers step up to the plate and continue pushing it. So, I mean, we'll see, but the last time we had a sharp pullback, it bounced off of there, what, 5-6 times before continuing back up? But it wasn't until, again here, we have a really strong correction phase down, and then it puts in a base. We have a really strong correction phase down. Question is this the base? From a risk-reward standpoint, I tell you what looks really nice, considering that the risk looks like this, and the reward looks like this, that's pretty spicy. That looks all right. So that's definitely a zone of interest for swings on the long side that's going to be of interest in the 38s, 39s. Primarily because the risk is so incredibly small versus the reward. If you're looking at the reward to the upside, 3-to-1 still fits on the inside swing. It's perfect. So, I mean, swings definitely potential on crude oil for the long side on a dip. Again, the important thing here is that the risk is small, and if it does start breaking through the lows, there's a few different ways to approach it. Obviously, hard stop or trying to buy in the dip. The way that this has been demonstrating its momentum, keep in mind, it does tend to slide through a little bit. So I got to be honest, I don't really want to necessarily use a hard stop initially because it does tend to be a little bit vindictive on these moves. What might be more beneficial is seeing how these last moves kind of took place. Right? The last time around, they trapped them out, took the stop, went ripping all the way back up to the highs. All right. Then they dipped back down again, giant wick, went ripping back up to the highs. Then they took out that low. Was it actually no? Is that a higher low? Oh my goodness. Oh goodness. That was a higher low. Was that a higher low? 80.78. Hold on. Golly gee willikers, Batman. Holy moly. Now you want to talk about a fuzz and a half. That's just the half. the fuzz blew away. Holy crap. All right, well, wow. That was a higher low. So, I mean, they are trapping the lows, and it seems like if they're going to do that, they're trying to slide down to what appears to be more of a 3-press wedge scenario. So we've got to kind of play that by ear, because a 3-press wedge scenario is pretty freaking far down right now. So you got to, understand the risks inside of this. I mean, it's either really low risk or the potential for a much wider type build-in trade. We'll have to kind of wait and see how they want to play it. Big wick on the low, especially with a trap underneath the bottom with a blow-off, would be definitely nice. Over on the euro, just an absolute massacre. 3 lower highs. Vicious lower highs, too. Yikes. It's so flat, I can't even draw a line across it. I've got to draw it off. But, I mean, perfect wedge or hold on the top. As far as the continuation, though, We had the bull rally to the upside. They were holding, trying to hold. Uh-oh, start breaking through. Wait, now it's resistance, resistance, resistance. Wait a minute. It doesn't mean that the bulls can't go back up to the highs, right? If we're looking at this from an overall perspective from the bottom all the way to the top, very obviously there's going to be a POC somewhere back in the middle where the market found balance before. That's kind of common sense. But in terms of where the market's returning to, it doesn't really then make much of a surprise that we're bouncing there. That seems to be the zone of support. And if they're going to create a higher low transition for a reversal back up, 16,165 is the spot. Although, if I had a choice, I tell you what looks a heck of a lot better would be an entry with a stop just underneath the low like that. Woo, spicy meatball. You know, I do like the area at the 165s, and if we're looking at it from a higher low transition phase, initially for the risk perspective, a 3-to-1 fits on the inside of the highs. So, I mean, maybe we can do a little bit better on the entry. That was a little too much. Let's try to go. Yeah, there we go. That gets it inside all these wicks. So that gives us our initial area of interest, but, I mean, really, this whole zone down here is a hot spot. Definitely has my interest, and considering the risk is significantly lower than what we were just looking at on the crude oil, Nasdaq, this gives us a couple different opportunities to work with. So nice little spot of interest here for the euro, but it is after 3 higher lows and a very sharp drop to the downside. So one of two things is going to happen here. This is either going to create a higher low transition where they trap the lows and it goes up. Low risk would be necessary for something like that. Or we see them, instead of reversing up, they take a secondary route where they try to get a bounce, pause, and then break through. And if they're going to be breaking through, the next zone of interest would likely be the volume balance point at 15,800. So we've kind of got to ask ourselves, like, is it worth holding on to that? And I think realistically, I'm going to play this one a little bit faster. I would rather see this bounce sooner than later, but I'm okay with the traps on the low if it happens on like some kind of slip or something. A little bit less lenient, though, than something like crude oil, which definitely has my attention a lot more aggressively for those slips. So we'll have to wait and see how they want to play it, but right now, euro and crude are the only ones that are setting up halfway decent. Looking at Bitcoin, Bitcoin did have a very nice pullback, and after that pullback off of the highs, we had a lower high, and if we're looking at the overall move, wave 1, wave 2, wave 3, wave 4, wave 5, nice and easy. After that wave 5, we went sideways for a little while, so wave 2, 3, 4, 5. We're just kind of going a little bit sideways, but attempting to potentially get this creationary impulse to the upside. Whether or not that actually happens remains to be seen, but we are coming off of a brand new low, straight up into a new high. So, I mean, one of two things, right? Buyers either gobbled up those stops like they were going out of style, or this rally up is a break even of the longs that got stuck over here, and Bitcoin's about to get the sledgehammer to the forehead. One of two scenarios. Right now, we're holding a really nice bull flag, so the bulls still have it in the short term. But I've got some concerns, right? We've got some potential issues. I'm loving the undertow that's been going on for quite a while now in the slower MACD as well. Definitely helpful. So Bitcoin is looking okay, but it could look better. Over on Ethereum, I love the higher lows here. That makes it a lot nicer. If the Ethereum market is going to break above the highs, realistically, we should see some higher lows in continuation. And if we look backward, we had the previous swing high, previous confirmed, these are confirmed, swing low. We broke above the confirmed swing high into a new confirmed swing high, and so far, we haven't broken above that. So that tells us that this is not a confirmed swing low inside of here, this orange swing. This is a non-confirmed intermediary swing low, which means that there is a very nice potential of a trap if Ethereum does catch a little pulse to the downside. A pulse to the downside on Ethereum sub 3900s could trap all of those stops out just to watch the buyers gobble them up and go screaming all the way back to the highs again. Right now, though, obviously the bulls are definitely doing just fine. We'll see if they can keep it going. Let's switch over into the 5-minute chart, see what's going on over here first before we swap over to the crypto sphere. Taking a look at the Nasdaq first, mostly sideways, and if we're looking at what took place from, and I got to clear off some of my old drawings here, what took place yesterday because I wasn't able to trade yesterday, we had a lot of back and forth vindictive man, yesterday looked like it's just an absolute pain in the butt. Big whip to the upside, big whip to the downside, and in the end, they ended up carrying on to the upside. That gives us a little bit of a potential measurement, right? Going from the bottom to the top of that move to project where the market may want to try to continue to. 100% deviation, as a side note, was right there. That was the top going into the end of the day, but if the market's going to continue further up, the 200% deviation of that reversal's up in the 15,657s. Everything is still kind of pointing higher, you know? Looking at the reversal move off of the lows all the way back up, since they never really stopped, we had L1s, 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 dip back to the L2. Has it pulled back since then? No. Okay, gotcha. So if we're going off the lows, we had the bottom up to the top, which was an L4. And typically after the L4, you're looking for an L1 continuation. They had an L2. That's kind of concerning, right? When you have an L2 pullback and you're looking for an L1, that's disappointment. Markets hate disappointment. So what do we need to break down that disappointment? They got to break through the highs. Really prove it. Check mark. Done. They got it. They proved it. So with this continuation to the upside, now the bulls are back on the table again. Here we go for L1s. The first pullback on the Nasdaq down to L1s is also around settlement, and that is an absolutely picture-perfect spot for the bulls to want to come back to. If we're looking at the most recent volume rally to the upside, we did have these two kind of funky pulses that happened. The initial rally to the upside with the top-weighted POC, and if we include the higher-low transition, we kind of had that break point and it never came back. So if these are shorts that are stuck, we can kind of go back to where would they be stuck from, right? Well, they'd be stuck from back here. Sellers looking for the continuation to the downside, looking for this to start really breaking down and following through. I mean, look at the drive down, right? Why wouldn't the sellers look for follow through? They didn't get it. So when the sellers failed the follow through, where did they come back to? Their break evens. Now, for those of you who are in the academy, you know exactly what that pattern is. It's one of the only reversal patterns that we actually watch. But along with that continuation to the upside, we also have a full flip. Thing went screaming up to the highs. I mean, this is L1 City. All over the place. Everywhere. L1s for days. Whether or not it'll actually make it there, it's a different story. But over on the S&P, delete some of the old stuff here. The S&P just didn't have a pullback. Okay. I guess off of the... That was kind of a big reset, but then we had the weekend. Ugh, that's disgusting. All right, well, through the weekend, I guess, that was an L4. How about after the weekend? It's probably a 5, right? Ooh, 4. Okay, so after a 4, we should see a 1. Immediately bounced off the 1. Double defense off the 1. Missed the 1 there. Okay. The bottom of L1 is also settlement on the S&P. So they're starting to line up. No, they're not based in Fibonacci percentages, no. I use the fib tool because it makes it easier. but I mean, you've been around long enough to know this is more just to fill other people in. The fib tool is kind of my universal does everything tool. it's my measurement tool, my risk reward tool, my L tool, it's everything. I try to do it so it's all in one. But no, they are not based in Fibonacci levels, although I do use the Fibonacci tool. All of those ratios are in the Academy. Unit 2, Chapter 8? Yeah. But much like moving averages, the design and the purpose is categorization. It's a way that we can categorize what the market's doing with reliable outcomes. So if we know that reliably this happens after this more often than not, then I know that I can hang my hat on it and we've got a possible trade, right? It's the same thing with moving averages. When moving averages cross, if I know that I can count on that 60% of the time or whatever, it doesn't have to be very high. But whatever it happens to be. I like moving averages and the fib tool. Other people like MACDs and divergences. Got the open right around the corner here. Crude oil's waiting for a little bit of a pullback. 83.39 is the initial zone of interest. On the euro, the initial zone of interest there is 16.160. We'll see what it wants to do from there. As far as the top volume traders on... I can't believe Shiba Inu. I mean, we can, but we can't. That's absolutely nuts. Incredible how Shiba has been moving. Did it make it up to 5,000? No, 48.60. Golly gee willikers, Batman. I gotta reload FedEx for some reason. Alright, cool. Maintenance on the 27th. Oh, that's tomorrow. Alright, cool. That's fine, whatever. That doesn't matter. Most volume traded today, Bitcoin obviously, then Link, Tezos, Ethereum, and Engine. 1, 2, 3, 4. I'll just do the top 3. So Link, Tezos, and Ethereum. We've got Link, Tezos, and Ethereum, so we are set. Next volume underneath that is Engine and Doge, followed by Monero. Monero? Where have you been, Monero? Jeez. Man, when's the last time we talked about XMR? Holy crap, it's been years. Well, that's also on the list. Making some moves. A lot of back and forth on Tezos. Lots and lots of up and down. Share the ratios with the members. I mean, so as far as the ratios go, again, the categorization is relatively straightforward depending on what you use. The concept is, are they aggressive? Then they should be holding higher up. Generally speaking, if you're looking at like fib ratios, then you're in like the 20s. What is the fib level? 21.36 or something like that. The next one below that would be 38.2. That's more like a medium, slightly aggressive. Then, of course, you've got like 50%. Everybody on the planet knows 50%. 618, 50%, that kind of deeper pocket. Still follows through, but it's deep. You know, if it goes back up, probably just tapping the highs, maybe something along those lines. You know, it's just kind of general common sense, but it's a way that we can categorize what's going on. But like I said, as far as the ratios and everything go, those are in the Academy. Unit 2, Chapter 8. $9.28 around the corner. Next slot, right before the open, is when things get a little bit rocky, sometimes a bit shaky. What is the AP? So yeah, I still have to make a video for what the APN is. And all of the other things have videos explaining what they are, except the APN. I haven't had a chance to record one. That one is coming, but I'll talk about that more a little bit later when we've got some time. We've got 2 minutes until the open, so hopefully that's okay. But if you need more info, you can go right on the main page of SSFTG on the top right. There's APN plus info. Everything's up there. So it's very detailed, I think. Why is my fan down? 2 seconds. Be right back. Okay, there we go. Yeah, the question was, are there monthly? There aren't monthly payment plans on the Academy because I have it priced what I believe to be incredibly aggressively low. But if you're looking for like payment plan structures, there are those designed for the VIPs, yes. We've got 10 seconds until the open. Again, you can find out all of that info in the Learn More section under VIP. We have the open hitting. A little bit of back and forth volatility. Nasdaq pulsing to the upside. Again, on both the S&P and the Nasdaq, I would really love to see a pulse down. that would be the preference. Ethereum's got a halfway decent bear bar to the downside. Same with Link. Tezos looking like they're trying to hold up, though. Sellers may be looking for a bit of follow-through on the short side for Ethereum and Link in the short term, back down to the inner swing lows, maybe? Nasdaq also catching a heck of a pulse to the downside. Sheesh. Any bulls who bought above that bull bar on the highs are likely going to be getting trapped out on this dip. A lot of their stops are going to be pressing down into these lower 80s. There's a ton of wicks down here in the 80s as well for bulls to potentially look for long scalps off of this dip. Beautiful long scalp right back up again. Wow. Grab those little stops underneath the swing low, pulsed it right back up again. See if they want to keep playing around with these lows. The low 80s are where they're kind of playing games right now. Yeah, Sheeb's going freaking crazy. 5,000, here we come. Now, the S&P... man. The S&P's so close to L1. $0.01. Yep. Shiba to a penny. Jeez. Holy moly. Nasdaq pulsing back to the upside. Very nice continuation higher, but hasn't quite popped the high yet. S&P is still kind of low, figuring out what it wants to do. Seems like it's playing a bit of catch-up, though. The majority of the bulls on the S&P is, if it were a surprise at all, 73.75 right at the bottom. They bought the stops. Nasdaq pulsing back to the upside. Hasn't broken the highs yet, but it's getting close. There they go. I exited the majority of my Sheeb. I barely have any left. Like a couple 100,000. Like very, very little. Which, I mean, still could be worth a lot more in the not too distant future, but I've gotten rid of most of mine. Kind of unfortunately, watching this continue up towards the 5,000s here, but you know, c'est la vie. Euro sweeps in the long for the upswing. As far as the most nearest upswing goes, at least, I'll base it off of the closest structure, which will put objectives into the 6515s up in that area. You got Sheeb with diamond hands. That's what I'm talking about, baby. Not all of it. No, I'm never going to be exiting. Well, I can't say never. I will be exiting Sheep at some point. But yeah, along the way, while it's rallying higher, you better believe I'm taking profit into the rally. Buy more in the dip. But effectively, the way that I'm looking at Sheeb is if we have a rally up and I have an average, let's say here, and the market does this, and I exit a little bit here, a little bit here. Sorry, let me correct this for Sheeb. There we go. Exit a little bit here, and the market continues up. There have been a lot of very volatile dips back to the downside. So effectively on these dips, I'm looking to buy lower than my previous exit. Because effectively, then, I'm buying on pullbacks from my previous entries, right? And then, as it goes back up, you do the exact same thing. Kind of get the idea. So, while it's rallying up into the highs, yeah, I don't have very much of a position anymore. Because I've liquidated most of it on the way up. When it dips, I'll buy more again. This volatility on Sheep's too nice to not play the back and forth. For me, at least, you know. Jeez, the Nasdaq just got slapped. Big pullback on the Nasdaq, flushing back down. Major volume flush, totally empty on the volume in the low 607s, 606s. Crude oil also taking in the longs. Crude's got time, though. That's a swing. I'm watching Nasdaq. Whoa. Wow, I almost got a real bad fill. Woo! Holy moly. I hit buy bid after it jumped up like 20 ticks. I did not get a fill. I canceled before that happened. Yikes. Thank you, cancel hotkey. Oh, jeez. It's the new Cabbage Patch for adults. Oh, for sure. 100%. I don't see it stopping anytime soon, which is why I'm continuing buying on the dip. But like I said, when we're rallying up, the first targets were in the 3,000s. The secondary targets were in the 4 to 5s. We're there. I like building positions where I can sell into those and then buy on the next dip. The problem is sometimes there isn't a next dip and you miss the entire rally. That's why I like still holding out with a little bit, like 10% position size or 5% or something small, just in case. As far as crude oil is concerned, this is the first entry, and if I remember correctly, this was a 2-to-1, not a 3-to-1. Yes, sir. All right. So, we've got the euro long for the swing back to the upside, 16,515 on crude oil, back up to 84.25. Although, if it does want to dip lower, much more interesting down in that zone. Nasdaq, jeez, oh Pete's. In hindsight, that scalp was probably, well, actually it was the best entry that you could have gotten on this entire rally higher, was that little trap low in the 80s. Hindsight 2020. I think another thing to, on the side note going into Christmas, is NFTs. Being able to give NFTs as like a Christmas present kind of thing. I could totally see that being a big thing. At least for the newer gen families, right? Not exactly seeing old Granny Ma heading out buying NFTs on Coinbase anytime soon, you know, but... I got you the Dogecoin! Thanks, Grandma. The Doge coin. Yeah, Nexo's doing incredibly well. Nexo's killing it. The big problem, and I actually am going to be recording a video soon about this. The big problem with NFTs right now is that they're based on the Ethereum network. The Ethereum network's like, oh, you want to buy an NFT for 20 bucks? Sweet. That's $100 in transfer fees. It's like, what? What are you talking about? Oh, you want a $2,000 NFT? That's $2,000 in transfer fees. If you want it there in the next 17 days, at least. You know, like, what? One of the platforms, which you guys should be very familiar with, and I've been talking about a lot, is Crypto.com, Crow, CRO, the CRO coin. They have their own NFT project, which is built on the Crow platform. Let me make sure this doesn't show anything, just my username. All right, that's fine. So the Crypto.com NFT, you can go into drops and you can see what's coming up. Like, there's a drop usually every day this week. This one's already sold out. This is one that I was talking about this morning. These were selling for $100 this morning. Now, I don't know if they're on the marketplace yet. Newest? Yeah. So these ones were selling for $100, 40 minutes ago? They're selling for $799, $113, $110. The $799 I think is unrealistic, but maybe these are the super rares. There's only 3. So these ones have 30, these have 30. You know, don't expect these flips to be anything massively quick, but here's the cool thing. If I want to go in here, I can go in and I can select editions, and I can go for sale, filter, fixed price, and now I can search the lowest price one. That's a buy it now price, effectively, on NFTs. That's $113. So if I wanted to buy this is edition 18. This is the 18th one that was minted. This is the 11th for $115. This is the 4th for $137. So you can buy the 4th edition ever minted for the $137, right? So if I wanted to select that, make sure it doesn't show anything, okay? Then you can go in and you can buy it for $137, and you can use your freaking debit card. It's ridiculous. And you can turn around and sell it on the same platform minutes later. Unbelievable. It's just absolutely incredible. And it costs pennies rather than thousands of dollars to transfer $20 on the Ethereum network, you know? I will, again, not going to lie, 100% upfront, I do think NFTs are the next bubble. Do I think that they're ready to burst yet? No. Do I think they're close? Around the corner. But, you know, that's why you don't see me buying any of those $100,000 NFTs anytime soon. No thanks. I'll buy the ones that are $20 that I think look cool, so even if they don't sell, I still got a cool looking NFT. You know, whatever. I'll hang it in my virtual house later. In Upland when I can transfer NFTs back and forth. Speaking of which, I'm pretty sure the properties that I bought on my NFT tutorial that I put on YouTube, I'm pretty sure those already sold. This is like a 3x return already. Anyway. More continuation to the upside on Nasdaq. We've got the first 10 minutes in. It's not really doing a whole lot. We've got swing longs triggering on crude, just waiting for upside targets for 2-to-1s. On the euro, waiting for 3-to-1s, and just kind of hanging out to the side. Tezos, Link, and Ethereum are the most volume traded on Femex. And looks like buyers are buying the dip on Ethereum down in these 41.88s. A little bit more on Link down in the 31.87s. Tezos, 2 back and forth. There's not really anything until like the $6.80s. Don't spend all that dogie on some fancy jukebox. Yeah, I know, right? Ay. You know what though? How cool would you be, like, as a I'm not grandparent status yet, but how cool would it be to sit down at the dinner table, carving into some turkey, looking at the presents, and old grandma hands you an envelope with an Ethereum hash key, transaction ID, to your NFT. My jaw would hit the floor. I'd be like, what? How did you even do this? Where did you even get the computer? Did you do this at the library? It would blow my mind. S&P gets a little bit of a dip. Honestly, the S&P doesn't really have anything of interest until like the 78s. That's pretty far down there. Nasdaq still incredibly aggressive. First 5-minute POC back at 624, although a big volume node. If we're looking internally, there's no candle gapping. I mean, there's one, but it's still developing. Got a minute left on the current candle. See if I can get a little bit of a dip back to the 78 quarters on the S&P. Got close, but nothing yet. to migrate up a little bit to 79 on the S&P. Closing above the POC on the Nasdaq, even with that bear bar. Wow. Ugh, man. Tezos doesn't have anything until like $6.80. 79.80. Link can't figure out what it wants to do. Not getting enough of a pullback on the S&P, and the Nasdaq is continuing back up to the highs. Ooh, S&P. Testing the entry, no fill. There we go. Looking for the target in the 80s. Testing the target, no fill. Nasdaq also catching a little bit of a dip down, although the Nasdaq is a bit more interesting down in the 32s if it can make it a little bit lower. The S&P tested the target, still no fill. Tested it again there, still no fill. One of these days, I'm sure I'll get a fill. Come on now. Well, I guess in the meantime, crude oil is rallying back up towards settlement. I've only got the one, but depending on multitudes, scalpers will be exiting into settlement. Come on, S&P. Jeez. Nasdaq still no little dip underneath that low. Crude oil's testing settlement, trying to get through. S&P testing the target again. Like, really? Still no fill. Please! Ugh. Wow. Nasdaq's getting a nice little dip to the downside here. Looking for a continuation pulse to the upside. There we go. Ooh, I got a really bad fill on that scalp out. S&P finally fills. Gah! Thank you, S&P. Jeez! Nasdaq, I picked up that little dip on the scalp, but I got a kind of bad fill on the exit there, too. Slippy, sloppy, wishy-washy. Crude oil continuing to the upside, making it up into this zone, 83.93s. As far as an actual risk calculation is concerned, I want to ensure that I am not giving back a 3-to-1 on my actual. Okay. So I've got my 3-to-1 locked in on my actual risk regardless, just because it barely took any risk. And if we can get this to continue a little bit further, then that much the better. I would like to see if we can get that 5-to-1 move, which is what it's testing right now. Get a little more continuation up into the 84 or something like that. So we're at the 5-to-1 actual risk on crude oil. On the euro, it's not really doing much. All right, I'm going to lock in the 5-to-1 on crude oil, the 5-to-1 actual, and I'm just going to let the rest go. It's one or the other. Probably the stop, but that's fine. Took effectively no heat on the trade, so the 5-to-1 is okay with me. Taking out on crude oil for the target. Euro is still waiting. The euro is going to take its sweet time, that's for sure. And here we sit again. Let's see here. Hey, Dave, how's it going? When I look at the Nasdaq 5-minute and the 500 tick, they seem to show a different story. Is that my eyes playing tricks on me? No, it's not. During training, if you could you go over the differences as to why you may want to trade one over the other? Definitely. Yep. And no, it's not your eyes playing tricks on you. 5-minute POC retesting at 624 on the Nasdaq, although we've got a secondary bear bar pulsing down. We've got 3 minutes left on the candle. There's still time to get it going. If things slow down, I'll just answer it sooner too, but at the moment, the Nasdaq, I mean, they lose a lot of volume if they start dipping underneath the 20s. And from a spike and channel perspective, we're kind of breaking back inside of it on the much faster. Okay. Zoom out a little further. The 5-to-1s for the Nasdaq, they're not quite there yet, but I mean, they're real close. They're at the top of the spike and channel. A lot of front runners will be taking their profit anyway. Let's see where else they want to go. Gold's getting kind of close down here. Gold's getting close. Where's the ES going now? The question of the century, huh? When we've got this kind of momentum, generally speaking, if the market is going from the bottom left to the top right, it usually keeps doing that. I know that's an incredibly oversimplified explanation, obviously. We have to look at the context, right? Why is it going up? Like we've been talking about, the market has been going up very, very aggressively, likely due to a lot of the shorts who are trying to get the continuation going, and they failed the continuation and reversed back up. And that reversal, as a side note, ended up being an L4. After that L4 reversal back up, we had that L1. Nope, we got an L2. That's a problem. Like, that's a little bit of a concern. Uh-oh, is this job done, or what's happening? But they re-up, they continue, really, really aggressive momentum to the upside. One of two scenarios is going to happen here. We've had the re-up from the bulls. So the likely scenario, the more probabilistic, with again, you know, an edge, we're talking like 60 to 61, 62%. It's not a huge edge by any means, but it's generally more than half the time you're going to see the market bounce on the next pullback towards the L1 or L2. But the thing is, when you extend away and they're not even getting an L1, no L1, no L1, no L1, breakaway, they're either going to get a quick rejection off an L1 similar to this, or maybe even some of these inside here, if you measure it up tight enough. Or they get a slightly wider dip to the next level, down towards those L2s. In this case, that would be around the 15,529s, but that can change depending on where the market is. Either way, we have our zone of interest, which is down here. It's just a matter of where they want to set up the base. Certainly not way the heck up here. So as far as where is the S&P going now, I mean, it makes more sense that we see a pullback. But along with that pullback, how much room is there? You know, I mean, the L1 is just underneath the low of the first five. to like 72, 72. It's literally under a point. It's a 3-tick range down here. If they want to go a little bit lower, then settlements down towards the lower portion. You know, so here, to me, if they were going to pull back, makes more sense. This is just much nicer. Not to say they couldn't get a trap underneath here, but honestly, I think they already tried that, and I think they missed it. So if they're going to pull back, I think a lot of traders will probably try to get a trap. It'll stall and then collapse through them down to where it's supposed to go. Although that, of course, might not necessarily always happen. I'm looking for a deeper pullback. Looks like everybody took their profit at the 5-to-1 on crude. Hard to blame them, huh? How do you say no to a 5-to-1? Like, maybe if I had more than one. But with just the one? Nah. Looks like everybody else did it. Yeah, for sure. Euro's still hanging out. All right, well, I've been trying to transfer a few $100 here and there to do a small account challenge on Femex, and I've been having a challenge and a half getting some. What's left in the Brave wallet? Like $100? Yeah, this was supposed to have sent 102 minutes ago. I just retried it again, and it's still not working. It's not even showing up on the blockchain. It's just nothing. So I don't know if I'm just gonna count that $100 as a total loss and just go with what I've got. I think I've got like 293. So it might just be good enough for the small account challenge for Femex, and we'll just go from there. So I don't have to deal with the frustration. I have been throwing a couple trades on with Femex, just so we're on the same table, just to kind of get things to ensure that we're all in the same place and ready to rock and roll. Looks like everything's working correctly. The last closed positions. Let's see here. How does this... Sorry, I'm trying to get used to how to display. It's not the same as on Ninja. I can't just open a... can't just open a thing. Okay. Well, anyway. I gotta do it without... There's no way to like hide the account. So you can see it's nothing like nuts or anything. But just kind of playing around with it for the last couple days to ensure that everything's working correctly. Like 12 cents, 2 cents, 14 cents, 50 cents, $1.24, you know, woo, big money. But the idea is just to make sure that the small account challenge side is working. You'll notice it's 1 contract, 2 XLM was 10, Wi-Fi was 5. Just you know, making sure that everything is ready. That's coming down the pipe. I was hoping to have another like $100 in there, but man, that just doesn't want to send. So I guess I'll just roll with what's in there and we'll call it good. Ay. You know when you just want something to work, but it doesn't? Mm-hmm. I think it'll be fun going into the end of the year, doing like half the screen with the Nasdaq and the S&P as we are, but then the other side like we are over here with Ethereum and Link and the 3 most active, but still looking for swings on crude and gold when they set up, which when they set up, they tend to set up pretty nicely. Got 1 minute until 10 o'clock, right around the corner. Get those last questions in. We'll get those covered for you. The S&P is starting to make me nervous. Boy, if I was a long and I were still in long and I saw this candle forming right now with 30 seconds left on it, that would start possibly pushing back on my confidence a little bit. Oof. Lots of wicks down here. They've got the pocket of wicks on the S&P to defend, but if that fails, then it's down to the 74s next. The Nasdaq's trying to defend it as well. Euro's catching their pop to the upside. Crude oil already backed off their target. So I'm not seeing any other questions. So let me just take care of this question here, the one that came in earlier. Are your eyes deceiving you, or are you going crazy? And then we'll switch over to the extended session. So when the question was, when I'm looking at the Nasdaq 5-minute chart and the 500 tick, they seem to show a different story. Is my eyes playing tricks on me? No, what you're looking at is literally two different stories. Effectively, the reason why we utilize two different time frames, or 3 or 5 or 10, or maybe don't do 10, but the reason we use those is we're waiting for all of the stories to line up with one another, right? But you're reading two different stories because you're reading two different time frames. If I'm looking at the 5-minute chart, what I'm seeing on the 5-minute chart, it could be totally detached from what I see on the 500 tick, or in a totally different perspective. On the 500 tick, we have a spike in channel that we've actually overshot the highs of, and I would be expecting a correction a little bit further down towards the lows. But if we were to look at the 5-minute chart, the 5-minute chart is demonstrating that I need to be a buyer basically everywhere on all of the dips. So how do I read that, right? I'm expecting a bigger pullback on one, but the other one's telling me I should be a buyer on the dip. Well, wait for them to line up with one another. Wait for the bigger dip on this time frame to then line up with the 5-minute chart to put you in your zone of support. And when I'm utilizing these faster time frames, because there's so many candles on these faster time frames, that's the point of using fractal time frames, you can derive patterns out of it. When you have a lot of candles, it's a lot easier to find patterns, right? I wouldn't be able to find this flag here if I didn't have a boatload of candles inside of here. You know, that's the whole point of why I zoom way out in the stratosphere, even though it's a fast time frame, because I want to see the structure. This is my structure view. This is the lattice, the grid work. This is what makes the market. It's bones, you know. This is where we want them to line up. So if I want to be a bull on the 5-minute chart, and I know that I want to be a bull on all of the dips, then I want this to correlate into the 500 tick, right? So let me transition this over. So I wait for my pattern or my setup or my second entry or failure, or L1, L2, whatever it doesn't matter what the pattern is, but you're waiting for your pattern to line up when you have a demonstration of proof. In this way, the faster time frame is showing bullish, the slower time frame is showing bullish, and when you zoom out beyond that, hopefully beyond that, the slower time frame farther than that is also showing bullish. You're getting all of the rivers to divert in the same direction. Right? Doesn't mean that it's going to, you know, work. It might just hit a dam and not work, and then you take a stop. That's how trading works. It doesn't always go through the way that you want it to. But our job is to make sure that they're all pointing in the same direction. You know? Ooh, Ethereum. Howdy, howdy, hey, howdy, whoa, hey, howdy, ho there. Wow. We've got a big old drop to the downside on Ethereum. Zone of interest is going to be down in the 41.14 halves or so. But hopefully that answers your question. It's not your eyes playing tricks on you. You are reading two different stories. Our job is to wait for them to line up. So. Anyway, let's move over into the extended session. For those of you who are ducking out or aren't a member or VIP, or you're just you're ready to call it quits for the day, perfect. I hope you had a great day. Enjoy. If I missed any questions, feel free to get a hold of me with via email, jhb@ssftg.com, or drop them in the comments below on the YouTube side. One way or another, we'll get them taken care of. If you're still going to be hanging out with me going into the extended session, just listen to me babble to myself for a second, and then we'll swap over, right? For the rest of you, I hope you had a great one. Enjoy. Rest up. We'll talk to y'all later, right? Have a good one. We'll talk to y'all then. Thanks.